Right now, the crypto market is just gripped by fear. I mean, sentiment is at rock bottom. But while pretty much everyone is panicking, one strategist is seeing a completely different story unfold. And his thesis? It might just change how you view this entire market.
So, who's this strategist? Well, his name is Jordi Visser, and he's not just buying Bitcoin every single week, he's actually doubling down when the price drops. So, what in the world does he see that pretty much everyone else is missing? That's the big question we're going to unpack right here. All right, first up, let's try and decode this panic that's going on. Because according to Visser, what looks like sheer terror on the surface is actually something way more constructive happening just beneath it. Okay, so this is the million-dollar question, right? If the price is tanking, who is actually hitting that sell button? Well, the answer might actually surprise you. Okay, so Visser makes a really critical distinction here. He's saying this isn't that chaotic, get me out, I don't care what the price is kind of selling you see in a real panic. Nope. Instead, what the on-chain data and the industry folks are seeing is large, methodical, and really orderly selling from people who've held Bitcoin for a very, very long time. It's not a fire sale, it's more like a planned distribution. And believe it or not, this actually has a huge upside. See, when one of these massive holders sells their coins, it's not like another single whale comes in and scoops it all up. Instead, it gets absorbed by hundreds, maybe even thousands of smaller buyers. And this whole process actually decentralizes ownership of the network, which, for the long-term health of Bitcoin, is a massive structural positive. And this quote from Visser, wow, it just perfectly captures his whole perspective. While everybody's freaking out about these short-term price peaks, he's pointing out that if you zoom out far enough, Bitcoin has never, ever truly put in a final top. He just sees these downturns as incredible opportunities inside a much, much bigger uptrend. Okay, this brings us to our second big idea, and it's something Visser calls the Great Financial Merge. This is the absolute heart of his thesis, and it's all about a fundamental rewiring of our entire financial system. So the core idea is pretty simple, but it's a huge one. This isn't a battle to the death where one system kills the other. The new digital economy isn't going to replace the traditional fiat system, the government money we all use. Instead of that, they're merging. The old pipes and the new pipes are becoming one single seamless network. So you might be asking, how does this actually happen in the real world? Well, Visser points to what's happening with Zelle as the perfect example. Zelle is used by millions and millions of people. The moment it integrates stablecoins, which are just digital dollars, all of its users suddenly have access to the cheapest, fastest way to move money around. And just like that, without even trying, they all have a digital wallet. The merge happens behind the scenes, without friction. Nobody has to consciously decide to get into crypto. Visser has this absolutely brilliant analogy to describe this shift. He says the old fiat system is like this old, kind of rundown casino that people just go to out of habit. But right across the street, a brand new, shiny, super efficient digital casino just opened up. And once somebody walks inside that new one, they never, ever go back to the old one. This merge is just making it dead simple for everybody to walk across the street. All right, on to section 3, old cycles, new narratives. Now, if the entire financial system is fundamentally changing, it means all those old models we use to predict prices, they might be totally useless now. And Visser is super clear on this. That whole popular 4-year cycle thing, he basically calls it a myth. It's built on like 2 or 3 data points, which is nothing. He argues that as Bitcoin gets more and more tangled up with the global financial system, these old isolated patterns are just going to become irrelevant. So let's put this head-to-head with gold. You see, Visser argues that gold's value, it's all just a story. It's a narrative people tell themselves about fear and war and currency debasement, and he believes that story is getting weaker. Bitcoin's value, on the other hand, is driven by actual technology, by its network effect, and by its growing adoption. Now, that is a narrative that's only getting stronger. Okay, now for sections 4, and this is where things get really interesting. We're going to look at 2 massive forces that Visser believes are going to act as incredible tailwinds for this whole new financial system: AI and government policy. So first, we've got to talk about something called the K-shaped economy. It's pretty simple. Basically, if you own assets, stocks, real estate, capital, your wealth goes up. But if you rely on a paycheck for your labor, your wages are flat or even going down. This creates this massive gap, huge inequality, and a ton of social pressure. And then AI enters the picture.
Visser calls it the single most disruptive and deflationary force in all of history. Seriously, it's on track to replace both thinking jobs and physical labor jobs, and that is going to pour gasoline on the fire of this K-shaped economy, making that wealth gap even wider. So what happens next? Well, this forces a response, right? When people get angry and squeezed, governments have to do something. Visser believes they'll have no choice but to provide support through stimulus checks and other transfer payments. The result is governments have to print more money. They have to inject more and more liquidity into the system. And all that new money, it's got to go somewhere. It goes looking for a home in assets, like Bitcoin. All right, this brings us to our final and maybe the most mind-bending idea of all, Bitcoin's sovereign moment. This is all about the point when adoption is no longer a choice for a country, but a flat-out necessity. Visser absolutely loves this quote from Michael Saylor. It captures the idea perfectly. See, Saylor's company, MicroStrategy, was basically a zombie company. It was stuck. It had no real path forward. And then, out of sheer necessity, Bitcoin found them. Visser believes the exact same thing is about to start happening to entire countries. I mean, just look at the real-world experiment that's playing out right now between Argentina and El Salvador. Argentina went the traditional route, they took the IMF bailout, and their bonds completely collapsed. El Salvador, on the other hand, adopted Bitcoin, and its bonds have actually traded higher. It found a totally new path when its back was against the wall. And this brings up a brand new kind of danger, something Visser calls a run on a country. Thanks to stablecoins, citizens can now flee a failing currency almost instantly. Think about it. We saw a run on Silicon Valley Bank happen in like 48 hours. Well, now, the same thing can happen to an entire country.
So, what's the defense? I mean, if your own citizens are digitally stampeding out of your currency, how do you possibly stop the collapse? Visser argues that the only real defense is to hold a neutral reserve asset, something no single country controls, and that can't just be printed into oblivion. And really, the only thing that fits that bill is Bitcoin in the national treasury.
And that just leaves us with one final, huge question to chew on. This whole merger of finance, tech, and policy, it's not really just about price charts. Visser sees this as a giant leap towards a truly borderless digital world. So if money becomes truly borderless, what happens to the borders themselves?